going on YouTube? It's Arkham and welcome back to another video. And yes, you guys read that title right. This is the last video that you guys need when it comes to trading ICT concepts, because in this video I'm going to outline everything step by step, the exact framework that you need to anticipate daily bias, get the right entries, and things like market structure and liquidity, as well as towards the end of the video, I'm going to give you a live trade example that I took with the live trading team inside of Spark Trading University that made us a lot of money. Make sure that you guys get the right education that you need and can apply it into your own charts and hopefully pass your first funding account and make your first $10,000 trading. Because if I could do it, everyone watching this video can do the same. It doesn't have to take long at all, and with the right mentorship that I can provide, hopefully we can fast track that process for you. If you guys haven't followed me on Instagram, you guys can at Arkhamtrades. This is where you guys can learn a little bit more about me. This is where I post my trades, payouts, testimonials, everything like that, as well as you guys can get additional education when it comes to mastering SMC and ICT. Now let's get into the video. When we understand why most traders fail when it comes to ICT, it's because they don't have the proper structure behind why the market should go higher or lower. You see, ICT is simply a puzzle, and your goal as an ICT trader is to take the most important pieces of that puzzle and lay out a model that's best fit for you, not scramble around with every piece in the toolbox and try to come up with some over the top 100-page trading plan. No, keep things as simple as possible and follow a set of rules that are repeatable. And not everything in ICT concepts is important, but this 4-step process that I'm about to outline, that if done correctly, then can hopefully by the end of this video, you can start to build that structure and find consistency when it comes to trading ICT concepts. The first step that we're going to be going over is using a higher time frame point of interest as our initiator. But what does that mean? Well, let's break it down. There are 2 points to a swing leg: an initiator and the terminus, which is essentially the start and the end of that swing leg in simple form. Essentially, our higher time frame point of interest is relative to the starting point, meaning that if we're anticipating a swing leg to form, it has to start at an area where price taps into a higher time frame point of interest. And you may ask, what classifies a higher time frame point of interest? Points of interest refers to either liquidity or inefficiencies inside of the markets. These points of liquidity are old highs and old lows, equal highs and equal lows, session highs and session lows, and daily highs and lows. These are prominent areas of liquidity that the market seeks on a day-by-day basis, and after being taken out, can create that initiation for the swing leg. And in terms of inefficiencies, we're looking at fair value gaps, order blocks, and breakers. And in terms of the higher time frame ranges, we like to use time frames like the daily, the 4-hour, the 1-hour, and the 15 minutes, as these provide the highest probability for a potential reversal or continuation to take place. The higher the time frame, the more likely the zone is going to hold. After the first steps, which is price tapping into our higher time frame point of interest, this gets us into our next lesson, which is the lower time frame change in state of delivery. A lower time frame change in state of delivery is another word for a shift in direction, where we tap into a higher time frame point of interest, price then displaces to the opposing direction, breaking back below the last up close candle, and in a bullish scenario, breaking back above that last down closed candle. This then signals to us with that bearish engulfing candlestick that price has found rejection from this particular point of interest, and we can start to look for higher or lower prices in the opposing direction. If price taps into a daily point of interest, we want to look for a 1-hour CISD. Price taps into a 4-hour point of interest, we want to look for a 15-minute CISD. Price taps into a 1-hour point of interest, we want to look for a 5-minute CISD. And price taps into a 15-minute higher time frame point of interest, we want to look for either a M3 or an M1 CISD. And essentially, last but not least, after all is said and done, price taps into a point of interest, we get our CISD, and then price gives us that pullback, which is in alignment with the 50% of the premium to discount zone. With that inefficiency, we want to then take our trade idea and execute, and we want to be targeting opposing liquidity for at least a 3-to-1 R. Now to put this all together, paired with time, preferably either the London or the New York session, we get these two schematics. The top schematic illustrates price tapping into a level of liquidity, which in this scenario is the London session lows. We get that displacement to the upside during that New York session. Price then pulls back into a lower time frame inefficiency, which in this scenario is a breaker level plus that fair value gap, which we then take the trade for a continuation to the upside for a 3-to-1 back above those London session highs. For this bearish scenario, we see price consolidating during the Asia session. We get this run higher during that London session, tapping into a 4-hour bearish order block. So the 4-hour, like we mentioned, we want to look for a 15-minute CISD and a 15-minute inefficiency. As price taps into that 4-hour block, we get that 15-minute CISD, we get this break of structure to downside, breaking back below these lows. And then during the end of the London session, we see this pullback right here into this last up close candle from this 15-minute bearish order block, right? The market structure obviously is bearish, reaching lower and lower prices. So price is going to react off of this last up close candle for this continuation to the downside, back below those London lows for at least a 3-to-1 This strategy is so powerful because it removes a lot of thinking. You wait for price to tap into a point of interest, that's your initiation point. Then you wait for price to give you a CISD and change course, that's your market structure shift. You wait for price to come into a level of premium or discount in alignment of an inefficiency, that's your entry, and you identify opposing liquidity inside the marketplace, that's your draw on liquidity. And you don't have to worry about daily bias because it's all done for you using this checklist. If price breaks to the upside after tapping into a bullish point of interest, that's a bullish bias. If price breaks to the downside after tapping into a bearish point of interest, that's a bearish bias. So now all you have to focus on is wait for your entry and identify your target for at least a 3-to-1 and it's a 3-to-1 because it leaves the best room for you to lose. If you lose 3 times in a row, one win can make all of it back, and if you win back to back 2 times in a row, then you'll be up over 6R, and you essentially have to lose 6 times in a row for you to come back to break even. This allows the best buffer and removes the thought of having a high win rate and focusing more on execution without fear and using proper risk management. Now we're going to go into charts. I'm going to show you an example of an actual trade that we took on the Dow Jones using this exact framework that I use on a consistent daily basis to print me money. Me and my brother Spec Trades have come together and launched Spark Train University. Coming from humble beginnings, Train has changed our lives and we're able to escape poverty and now live a life of abundance in only 1 year. If we could do it, everyone watching this video can do the same, and it does not have to take long. And that's why we developed a framework that anyone can use inside of Spark Train University that gives them the same results that we got, if not even better, and we want to hold every student's hand inside of Spark Train University until they are profitable. Stop going about it alone and let me and my brother be your new mentors. And for this video, I'm opening up 5 slots for the next 5 people to join Spark Train University. You can just click the first link in the description to join Spark Train University, and back to the video. So we're looking at the Dow Jones here on the 4-hour time frames, and some key things I want to take note of is obviously looking at what we've been doing the previous day and identifying overall market structure. We can clearly see that the market is reaching lower and lower prices. The prior day, we reacted off of this bearish inefficiency, just like so, in the form of this bearish fair value gap, which was also, I believe, in alignment with the 50% of this premium to discount zone. So obviously a perfect inefficiency here, came back into it and saw this drop to the downside. So from this alone, I can identify this as a potential strong high. If we're anticipating lower prices inside the marketplace, price should then respect this previous high as a higher high for a continuation to the downside. And we can obviously identify these previous daily lows as potential areas of liquidity the marketplace can reach down into, as well as we do have this long wick inside the marketplace. I want to take note of this long wick because usually higher time frame long wicks inside the marketplace are usually lower time frame order blocks. Coming down to the lower time frames here on the 1 hour, we have this 1 hour order block, which is exactly what I talked about when using the higher time frame long wick is usually a lower time frame order block. So we have this lower time frame 1 hour order block in alignment with that higher time frame long rejection wick, as well as we do have areas of liquidity below us, like this trend line liquidity right here. Retail thinks this is a overall bull flag and we could see higher prices, but as price reacts off of this bearish order block, I'm most likely going to anticipate price to find a measurement of rejection here to then seek an overall lower prices, and the previous day lows are a perfect area of liquidity we could see the marketplace reach down into. Since this is a 1 hour bearish order block here, I want to go down to 5 minutes time frame as the 9:30 stock market exchange opens up in alignment with that 1 hour point of interest with that 5-minute inefficiency and 5-minute change in state of delivery. On the 5 minutes time frame here, and the 9:30 stock market exchange is about to open up. Just a quick recap, right? We have this 1 hour bearish order block here as that area of resistance, have this level of liquidity above us, which is that strong high in terms of market structure, and this level of liquidity below us, we are drawing liquidity. We're anticipating the marketplace to continue lower. The stock market exchange does open up at 9:30. I don't want to trade before that or even during it because such of an influx of volatility, but at 9:45, I want to look for my trade idea. We can see the 9:30 stock market exchange opens up just like so, and we get this change in state of delivery, which as price gives this harsh bearish engulfing candlestick back below this last up close candle, as well as we do have this market structure shift as well. Overall, price taps into our higher time frame point of interest, giving this bearish engulfing candlestick to the downside, giving us this change in state of delivery, as well as the market structure is shifting from higher to now lower prices. At this point, I want to identify if a low is being formed to where I can then use my premium to discount zones and gather an inefficiency. So essentially just like that, we have this low being formed right here. I want to anchor my GAN box from the high to the low, and we get the 50% here. If you guys want to know my GAN box levels, here it is right here. This is the GAN box on TradingView. You guys can just use these specific levels for identifying your premium to discount zones. And we have this inefficiency here in the form of this bearish fair value gap here, which is also in alignment with the 50% of this overall premium to discount zone, as well as we do have this breaker level right here. We can identify a breaker from a high, low, higher high. So as price breaks through this previous low, this is now a level of resistance, kind of like a break and retest pattern. I'm going to put my entry at the 50% here of this premium to discount zone, which is also in alignment with that breaker and that bearish fair value gap. I'm going to put my stop loss back above these highs here. Pretty solid stop loss here for about 60 points on the Dow Jones, targeting back lower prices for over a 3-to-1 R, reaching back below those previous daily lows. Perfect setup right here. Let's see how it plays out. Price comes back up, reaches back into my entry level, and then we see this drop to the downside, creating this inversion fair value gap right here. Inversion fair value gap is where we have a bullish fair value gap and price breaks through it. So if you guys do scale into your entry positions, which I usually do like to scale in, I'd like to scale in back into this inversion fair value gap, put my stop loss back above this previous high, because now this is the strong high. This was the strong high up here. After reacting off that point of interest, we got this drop lower, came back into this inefficiency. Now this is a strong high. So I'm anticipating price to hold below this level, and I'd want to put my entry here for my scale in back below lower prices for potentially a 4-to-1 R, maximizing on my winning positions. If you guys do get a good trade idea, which in this scenario is an A+ setup for me, I like to scale into my positions and maximize them. So boom, price comes into our scale in, and we can see that price respects that previous high, doesn't take it out, and then we see this drop to the downside. So we tapped into this higher time frame point of interest, which was that 1 hour bearish order block, came down to 5 minutes, got that 5-minute change in state of delivery, came back into a 5-minute inefficiency, which is in alignment with the 50% of this premium to discount zone, took the short, scaled in, reaching back into our target, the previous daily lows. And I'm pretty sure the marketplace continued to see lower prices. So if you guys wanted to aim for a little bit more, you could, but I like to take it off at 3-to-1 R and be content. That's gonna be it for the video. If you guys do want part 2 of this video, where we go into the charts and look at anywhere from 3 to 5 in-depth examples and really break them down even more for swing trading, day trading, and scalping, make sure you guys click that like and put a comment saying that you guys want to see part 2, and hit that subscribe with notifications on to never miss a video by me. And if you guys want to join Spark Trading University, that's me and my brother Spec Trade's private mentorship. That's going to be a first link in the description. I'm Arkham. Be safe.